Hi guys, good evening, and welcome back to my channel. I just wanted to take you through a few things. I promised to actually take you through volatility index trading, and then also I wanted to show you how markets accumulate, how markets manipulate, and then how the market redistributes when it comes to trading of volatility index. All right, so I want to quickly take you through. I have a few signals here that I think I got a signal today and I traded it. So I'll take my time and take you through. But generally, when you're in the market, you should also know the direction of the market. The bias of the market. When the market is bullish, you should know. When the market is bearish, you're in a bearish market, you should know. Right. So for instance, this is typically a chart. Um, and this is a typical chart which shows that the market was actually trading. Let's say if it was only this particular chart, we would say market is bearish. Okay, yeah. Why do I say that? Because up again, and then down, and traded up. Always know that when the market is in a particular direction, the lows, for instance, if the market is bearish, is trading downwards, the lows of the current low doesn't break the previous low. Okay, so this one you could say that current low doesn't break the previous low, but the current high doesn't break the previous. Sorry, the current low breaks the previous low, but the current high doesn't break the previous high. Okay, so that's when we are in a bearish market. You could see it traded down here and then came back up. When it came back up here, we noticed that price did not break price did not break the previous high. Okay, all right, so we continue from there, and then it traded down all this way, and then we don't know what it's doing here. Okay, but we could see a lot of wicks here, and which gives us a signal that there's something going on around this area. Okay, so let me quickly remove everything from my chart. Sorry, let me remove everything from my chart. Then we are good to go. So take note what is happening below this area. Take note what's happening below this area. Okay, I want you to take good note of what's actually happening below that area. All right, okay, so let me zoom out. So below this area, what is actually happening? So let's take our time and then go down. This is a monthly candle. Let's go down to the weekly time frame and see for ourselves what's actually happening below that area. you know the market was actually trading from this point. It came up, came down, came down to this, let's say this point, came down to this point, went up, came down to this point, up, came down again, up, came down, up, down, up, and came down. Take notice when it came down to this point, it went up and broke the high here. I said that whenever we are in a bearish market, the current high is not broken, doesn't break the previous high. So, but this is the situation. The current high here broke the previous high, so automatically we have what we call a shift in market structure. Okay, what it means is that the bulls actually want to take over the market, or the bulls are taking over the market. Okay, that's what we call there's a shift in market structure. Okay, So when you say there's a shift in market structure, it means that when the market is trending downwards, the previous high, which is not supposed to be broken by the current high, now has been broken. So it tells us that the bulls are actually coming into the market. All right, so we begin to look for a way of entry into the market. All right, so the market trades up high and comes down to this point, and then takes down. It gets to a point and then it gets reversed, goes a little bit up and comes back down again and takes down the lows here. You know, when price is trading, we have something we call this is the what's the name, the long term high, the long term high, sorry, and the long term low. You know, but we have short term lows and short term highs. Okay, good. The short term lows and short term highs are price points that are created to give in more liquidity or give in more access point the for the for the for the market to have more to grab more cash, okay, or to grab more liquidity. All right. So for instance, if a market trades down this way, okay, and price comes back to just run below these lows, what it means is that when price trade and comes to this point, the mindset of a normal retail person is that, okay, when price has gotten to this is a support line, so they put a line here and say, oh, when price breaks below this, price will sell. Now price breaks below this line and then it fails, so price breaks below this line. So when price breaks below it and closes below it, the next thing is that the next week is going to sell. Then they begin to plan for a sell within that week. And look at what the algorithm does. It begins to sell briefly, then boom. It begins the next week, it sells briefly, then boom, it goes up high into the sky and trades against them, and they are in deep losses and they are out of the market. They are always saying that, oh, I'm making losses. So this is a short-term low which was created. Market came back, took down the short-term low, and then it rallied back up. Okay, so let me show you something. The highest, when we look at this candle, the low that came on this candle was 1708, 1708, and look at the low here, 1709, which means that this still remains the long-term low. Everything here is just a short-term low. Okay, so price came in and then still took down and begins to rally back up. All right, and then what happens here too? There was another short-term high that was created. Okay, now price begins to trade up here to this point, and then it takes down all the short-term lows. And then see, when it took down the short-term low, it didn't continue trading up, it traded down. The same premise. People here believe that, oh, price is selling, so it's buying, so when it breaks above this, we'll buy. It breaks above it, they place their buy orders, and then market trades against them. It hits their stop loss and they're out of the market. So the market makers are always winning. The big banks are always winning. Okay, so this is how the market is actually run. So below this line, I mean, this is what you could see what was happening on the weekly time frame. Okay, so beat it down to um, um let's beat it down to the daily time frame and see if we could find something nice. Okay, so now let's look on the daily time frame. This is what was happening. This is what was happening on the daily time frame. Okay, so let me do close in a little bit. On the daily time frame, actually what happened is that price actually traded and came to this area. So this area, we had what we call an order block around this area. This bearish candle, is what actually formed the block that price got bounced back off it and then came up and formed two equal highs here. You know, this is the retail mindset. Price has been bounced off around this area and bounced off again. What it means is that it becomes a resistance level. So they are hoping that end price breaks through the resistance level is going to buy. That's when price actually comes down to take down the lows below this area that has been bounced off the other block. Yes, this one was also equally on the other block. It was in the middle of the other block. Those who understand the other block theory, this one was in the mean threshold, is on the middle of the other block, their bodies actually. So they got bounced off the other block and then they traded up, came down to take the equal lows, equal highs here, and then it traded against them again. So exciting. So when price came down, it came down to this point, and then it got bounced off from this point, and then it begins to rally back up again. Now, my question is, how then price gets to this point and then begins to rally? What is the premise? Okay, so my mentor has a lot of things to teach us. Look at this place. There's what we call a fair value gap. A fair value gap is actually a price point where price only trades towards one direction and never in the market generally there should be buying and selling. Someone must be selling and someone must be buying. If you sell, you can't just go to the roadside and say, I'm selling cars. If you sell cars and no one comes to buy, what you do is just a waste of time and no business transaction happens. So in a normal business transaction, someone is buying, someone is selling. Right. So here there's only buying. Right. After price actually dropped towards this area, there was only a buy. So there must be a balance here. After price had gone back all this way, you had to come back to rebalance the market at this zone. Okay, so let me maybe change the color so that it becomes something light we can just work around with. Okay, so this is okay. So this is quite faint, yeah. So let's see how price got bounced off this area. Price traded into and then it begins to trade out of it again. Now let's go down to the smaller time frame so that we can get a clear picture of what price actually did. So this is it. Price actually traded, came down to this point, rallied up, came down, touched, and closed in on the fair value gap and began to trade away over it. So now let me show you what I wanted to actually show you today. I was telling you how market actually accumulates, manipulates, and then eventually how price redistributes. Okay, so look at this chart carefully. I hope you can see this chart carefully. I hope you can see. Now look, price actually traded from this I want to take off this thing from the chart. So price actually traded from a certain point and came down to this area. Okay, price actually trading from a certain point, a certain high, came down and began to rally back up again, and then it formed this area that usually the retail calls it consolidation. Okay, this price is neither going, it doesn't want to, is reluctant to go up or trade down, so it's trading within an area, just consolidating up down up down. Now you could see that as price was trading in this area or ranging in this area, so here we call it market is accumulating. What is it doing? It's accumulating orders to either buy or sell. Now here we feel price came back from the top. So when price is accumulating, the normal mind is that if price accumulates, whichever area it will manipulate as will trade the opposite. So now price accumulates and the manipulation was that it traded down. So now the retail mindset will tell you that okay, as price has broken down the accumulation or consolidation area, then it will trade down. It breaks down the consolidation area and then see what happens. It trades back and then it takes down this high here. It takes it down. Okay, here it took that high here. It took it down from this point. This candle actually took down the high. So you can actually set your trade premise around this area that when you see an accumulation and you see price actually trade opposite direction, there are probability of it. So here, and what premise must you also rely your analysis on, analogies on? So here, when price accumulated, you remember we're trading within this area. We're trading within this. Sorry, we're trading within this area of, so we said price had actually, so we're trading within this area. So let me go back to my time frame. So we're trading within this area from this blue line to this other blue line. No, so price actually came down, went back up and touched the entry of the blue line, which was the green line, which is the bullish candle, which is the fair value gap. Went to touch the top of it and came back down, began to accumulate. So now around this area, the necessary thing is that we want the gap to be closed. It came down here, then that touched it. So now as it traded into and closed down the gap, we expect it to bounce back up. Okay, so it bounced back up and then came in and closed here above this high, and then I just took my trade off. All right, that's how come I took a trade. I took a trade of, okay, so let me quickly reconnect my internet so that I show you where I took off my trade. Sorry, so it makes a lot of noise. So basically that is where I took my trade. So this afternoon, so usually it will be more easier if you actually see the trade this way. So for instance, this is where I made my entry. I made my entry here, and I took off the trade when it had taken down the high from this one. I didn't actually see it earlier. I went on the chart very late. So when I went onto the chart, I noticed that, oh, price has done some accumulation, manipulation, and then redistribution. So I took off. I made an entry back here, and then I knew it was going to. So I took off. So usually, if I had got it earlier from this point, I would have taken off my entries from this high. Okay, I would have taken off my entries from this high. All right. So guys, this is basically, you find a lot of this on the chart. Just open your eyes and go through the chart. You find them almost all the time, almost all the time. Price comes from a certain high, begins to accumulate, just manipulate, and then it redistributes to the right direction. You see, it took down this high and it has taken down this high also, right? So it will be a good place to take profit. All right. So I took my trade here and I took off here, and I came back in again. I wanted to come here, but later on, okay, it's okay, it's okay. I think I even told a friend of mine to take the trade, but I later on told him to just cancel the trade and just relax. I'll give him a good entry later. All right, guys. So basically, that is all there is with the manipulation, the accumulation, manipulation, and redistribution. So go to your chart. I know you'll find a lot of them on all time frames. You find a lot of them on different time frame, even on 1 minute time frame. You find a lot of them. Okay. All right, guys. So I'll record another video soon to I'll have another video to start with the basics, especially if you want to trade volatility index. I want to start from the basics. The reason I love trading volatility indexes than the currency pairs. I don't know why, but my mentor Michael ICT, is actually trading. I've not seen him trade the volatility index, but um, whatever he teaches, I believe works so much well for me here as I trade the volatility index. So I believe I'll stick with it and then I'll run with it. All right. So wish you all the best, and then you can join my Telegram channel, and then I share a bit of signals there, here and there, buy, sell, buy, sell. All right. I hope you enjoy this tutorials. I hope this video comes out clean because I'm trying a new recording software. All right. So join my Telegram channel, and then subscribe to my channel if you are new to the channel. Okay, subscribe to it because I'll be sharing more stuff for you to enjoy trading volatility index. Don't be losing money on volatility index. Okay, don't be losing a lot of money. Okay. So this one, the entry I made an entry, a buy. Then later I said no, let me. So I was more convinced about. I re-entered here. Right, I took off here, and again I came in here and I took off here again. I mean, it was small entries. But look, don't be too greedy taking. I always make profit trading. I don't trade expect the price will go up. Oh, yes, I have swing trades, but I take good profits all the time. All right, so I wish you all the best in your trading and stay focused. Okay, so I'll see you in my next video.